Welcome back. The Federal Reserve is getting more aggressive against inflation.
The board announced it is raising interest rates 3/4 of a point, the biggest increase since 1994.
For more on the Fed's decision, let's turn to CBS News business analyst Jill Schlesinger. Jill, good to have you with us. Let's get right into it. How will this move help with controlling inflation?
Well, the Fed is hoping that they tap the brakes on the economy by raising interest rates, which would curtail borrowing some, make it more expensive to borrow, and then people and businesses would not spend as freely. But there's a little cautionary tale in this, and that is that the Fed can only really address the demand side of the equation. Supply still is a big problem, whether it's because of COVID and recent lockdowns in Asia or the war in Ukraine. But the Fed is hoping that by at least controlling demand and getting that in line, that overall prices should start to come down eventually.
And Jill, just 6 weeks ago, Fed Chair Jerome Powell said that officials were not actively considering a move this large. What's up? What changed?
Well, 6 weeks maybe is an eternity when it comes to the economy these days. What really changed is that the rate of inflation as reflected in the Consumer Price Index, or CPI, was hotter than a lot of economists had predicted. And that meant that we saw an 8.6% increase in CPI. And more importantly, it wasn't just food and energy. It looked like it was a broad-based increase, all categories essentially seeing rises in prices. So the Fed was a little spooked by that. And also, the fact is that expectations for inflation, not just in the short term, but over the medium and long term among consumers and businesses, that is actually starting to change. And that is really making the Fed feel like it had to act in a bigger way than just a half a point. That's why we got that 75 basis point increase.
And Jill, speaking of expectations, how does this rate hike affect people who are looking to get a loan?
Well, you know, if you're looking to get a loan, it's going to cost you more. And if you think about it, maybe if you're carrying a credit card balance, that's going to almost immediately show an increase of what's due. If you are looking for a new car, an auto loan will be more expensive. A lot of business loans are tied to short-term rates. And also, of course, if you are looking at an adjustable rate mortgage that you hold or a home equity line of credit, that could be more expensive. We already know that mortgages, by the way, they're not controlled by the Federal Reserve, but those rates have almost doubled from 3% to 6% over the last year or so. So that's already being felt in the housing market. So all this together says that borrowers, it's going to be more expensive. Silver lining, savers, you get paid a little bit more interest in your accounts.
All right, I guess
we'll
some
take that.
silver lining there, but a lot of things to consider. Jill, thank you so much for your time. And you can see Jill regularly on CBS Mornings and the CBS Evening News with Norah O'Donnell. We'll talk to you later, Jill.